the Nifty. Let's talk about the primary market then. Emcure Pharma's near 2,000 crore IPO has opened today for subscription. Will close on the 5th of July. So to discuss the objectives of this issue and the post-listing growth strategy, we're now joined by the MD and CEO of the company, Emcure Pharmaceuticals, Satish Mehta, along with the whole-time director, Samit Mehta. Thanks a lot, Satish and Samit, for joining in. Congratulations for coming to D Street. It's a near 1150 crore offer for sale, 800 crore rupees, or rather 600 crore rupees in terms of fresh issue. 800 crore is the fresh issue, of which 600 crore rupees is what you've allotted for debt repayment. So the first obvious question then is, what's the total debt on your books as of right now? With the debt repayment, what would be the delta when it comes to your finance costs? How much will they come down by?
First of all, good morning, and I very much welcome the opportunities of interacting with you. Thanks a lot. Obviously, this is a great moment in the history of the company, in the sense, somebody like me who started his career in early 80s and started with a handful of people. In fact, I'm a graduate from IIM Ahmedabad, only person, from my batch who did not, for any placement because I felt, I will do something on my own. And this has been a journey of last 40 years, in the sense, I very jokingly keep on saying that in my 40-year journey, I never got any promotion because I started as managing director. I continue to be a managing director, CEO, even today as well. So this is what it is. Now, coming back to what you asked me, the question, very specific question. As far as the debt is concerned, as reflected in RHP on 31st of March, it was something, close to 1,550. And out of that, 600 CR, out of 800 CR that we are raising on account of primary, will go for reducing the debt.
All right. We will ask you about the reduction in finance costs and the impact on the EPS thereafter. But you jokingly said that you've never got any promotion in your life because you started out as MD. Well, if one got, the position of MD and the 1% commission of profits as salary, that amounting to nearly 22 crore, I don't think anyone would mind. So that's just on a lighter note, Nigel.
Well, that's right. And, Mr. Mehta, you went straight into bat at the opening. Whether it was Sachin, Virat, Rohit, all of them, they started in the middle overs. And then, in fact, middle order, and then they went into the top of the order. But you debuted straight at the top. So good on you. But let's get back to the numbers then. As you said, out of the total money that you're raising, 600 crores will be used for debt repayment. So what does it bring your debt number down to? Point number one. And point number two, the 600 crores, what was the borrowing cost of it? So we could get an annual saving on that number?
No, that's a good question. But again, coming back, to this one, that as far as Rohit and all these guys are concerned, they become international players. As far as I'm concerned, I started in league, small league, in Maharashtra. So to that extent, there is no comparison really. It's a great feeling, to lead this great company that has been built, with a lot of passion.
Yeah.
And coming back to what you said, that as far as 600 CR is concerned, that is going to be for reduction of debt. So obviously the interest cost, should go down. And obviously that should get reflected in EPS as well. Now listen, as far as I'm concerned, the numbers, they're all in... I think the cost of interest is around 8 or 9%. So that should obviously get reflected in the PAT, going up, going forward.
So 54 crores order will be the savings.
I imagine so.
Yeah, okay, all right. And the debt number comes down by how much once you repay the 600 crores?
As I told you some time back, as far as debt is concerned, that was 1,500 ballpark figure.
Okay.
On 31st comes down, and again, what really happens going forward, the company should also generate cash. So I think, we are quite comfortable. And having said that, I must tell you that built up the company from scratch. So to that extent was not really averse, to borrowing.
Got it.
And that's what is getting reflected because, as I am listing the company today, the promoter group, holds 83% of the equity. So I think, in my career, long tenure of 40 years, there is not a single incidence where we have missed the financial covenants.
Got it.
So I think, it's a new journey and we are very excited about it.
All right, you are excited about it. Let's bring in Samit in the conversation as well. Samit, I'm looking at the last 3 years, the data that you guys have provided. The revenue has grown at a CAGR of 6.6%, which is actually, one would say, a lot lower than what a lot of the other companies in your peer set have grown as well. And in doing so, your EBITDA has actually declined at a compounding of, or rather discounting of 4%, and the EPS also has declined on an annual basis by a rate of around 13.5%. So going forward, I just want a couple of details. One, what is a sustainable rate when it comes to your revenue growth going forward? What is a sustainable margin that you're looking at? And as a result of which, what could the growth in your company's EPS be? Because the last 3 years, we've seen a decline.
Absolutely. I think a couple of things that can explain, the numbers that you were just mentioning. Of course, if you start off with FY22, there was a bit of COVID noise that, the entire industry experienced. We were also beneficiaries in terms of a lot of our products like zinc, vitamin C, enoxaparin, gaining high revenues in that specific year. Other than that, I think the growth has been, quite steady. Specifically talking about the EBITDA and the PAT and, subsequently the EPS, two things that have happened also over the last 24 months. One is we have consciously invested in increasing our field force. So we have, enrolled more than 1,000 medical representatives over the last 18 to 24 months, which is almost a 25% jump compared to where the number was earlier. And the second is there's been a significant capex over the last 18 months in the second wave of investment, given that, most of the first wave facilities were reaching optimal capacity utilization. Giving you some outlook, I think, I can talk about the three functions and give you a perspective there in terms of R&D, manufacturing, and BD. And, the kind of initiatives in terms of R&D and manufacturing, creating the additional capacity, we see a lot of runway. We've made the right investments in science, technology, and innovation, which should continue to drive growth. And of course, Sanofi partnership is one example of the in-licensing. We will continue to work on several more partnerships.
Okay, all right. Just want to confirm, R&D as a percentage of sales was, I think, around 4.5 to 4.7%, right? Will it hold around these levels?
That is correct. We believe, as has been historically, anywhere between 4.5 to 5% is our investment in the R&D.
All right. And, you won't be able to give us the fixed number, but on listing, we'll try to squeeze that number out of you all. But margin trajectory will improve from here on?
So a couple of things, right? Once the debt reduction happens, and like you correctly mentioned, the, interest cost or the financial cost improves, that probably should flow in, right? In terms of an improvement that could happen in terms of either the PAT or then subsequently the EPS.
Okay, all right. The PAT and EPS, but we'll want further color on the operational performance, because obviously that interest cost repayment will come post the operational performance. Be that as it may, let's understand the business a little bit more in detail. The domestic as well as the export mix, currently it's at around, I think, 49-51% odd. How do you see this number progress moving ahead? And also you're forayed into the CDMO business, right? What is it as a percentage of your total mix, and where do you see that number headed to?
Sure.
Question. Before going for this question, I would just like to add to what Samit was saying some time back, that as far as the 1,000 medical representatives that we have added, it takes time, to reach the productivity, desired productivity. So as we increase the productivity, that should also have a positive impact, on the EBITDA and margins that we have. And the second thing, that we had 9 manufacturing facilities, we added 4 manufacturing facilities. So that will also take some time, to ramp up. So that is something, we'll keep on doing. The other area that I would like to say, draw your attention, the way the company has been built up by us, we have essentially been focusing on science, technology, and innovation. That has been the gene of the company. So to that extent, I think, the type of differentiated products, that my company has given in last, 25 years of our journey in marketing, that will continue. That is something, which is very close to our heart, whether it is chemistry-driven products or biotechnology, that we will keep on doing. That's the core of the business. Now, coming back to what you asked, about exports. As far as exports are concerned, I mean, we all like, the emerging markets. I mean, the way we are extremely passionate about the domestic market, and we want to grow in the domestic market. That's the main area we will pursue. But at the same time, we like emerging markets, because they mimic the domestic market, to a very great extent. There are a lot of countries, where we sell branded generics. And there, what really happens, the products, that we have in India, which are differentiated, or the biotech products, that we have, they also have a very good future, in the emerging markets. So we are very bullish about emerging markets. And as far as Canada and Europe is concerned, we have done well. It's on the back of the acquisitions, that we had in 2014-15, and the recent acquisition that we have in Canada. So that will also be driven by complex products and complex injectables, to give some color to the whole thing. I would also like to add. One more thing. Emcure is the first company which has got approval for amphotericin B, a liposomal injectable, very difficult, complex, to manufacture, apart from the innovator Gilead in UK.
So we get that, Mr. Mehta. We get that. What we really want to know before we let you go quickly is, where do you see this mix going? Export versus domestic, and also acute versus chronic. Where are the margins better?
Yeah, coming back to what you were saying, absolutely spot on. As far as today is concerned, 48% is being given by domestic contributor, 52% comes through from export. I would like the ratio by and large, will remain same, but I wish, as far as the domestic is concerned, it tilts, towards domestic. I'll be happy if domestic is 53, 54, 55, and as far as the exports are concerned, that is, 45, 50, or whatever it is. So focus will be on the domestic market. That is something, which will happen. And the second question that you asked me was regarding, acute and chronic. So today, what really happens, that acute and chronic, we do around 45% in chronic and 55% in acute. But at the same time, what really happens, we are very strong in gynec. In fact, gynec is one area where we are leaders by distance. So as far as gynec is concerned, some time back, that was taken in subchronic. If you add that, in that chronic and subchronic put together, we are at 70, and 30%, is coming purely from acute, where you are talking about anti-infectives and pain management, gastrointestinal products, and so forth and so on. So basically, as far as chronic is concerned, the area we like. And obviously, as far as chronic is concerned, the margins are better, and company will keep on, focusing on that. I would also like to draw your attention to the recent, arrangement that we have entered with Sanofi, where we got their portfolio of cardiology, and even for that matter, 220 medical representatives of Sanofi. They also joined the seamless, what I would say, induction of these guys, took place in Emcure. That will also help us to build on the chronic portfolio.
All right, Mr. Satish Mehta and Samit Mehta, thank you so much for joining us and giving us a brief look into what the company is all about. The IPO opens today. Of course, we will be joined by you when the company lists as well. And that time, we'll press you more when it comes to numbers and future growth prospects that you have, along with some specific questions that we'd have as well.
Yeah, Mr. Mehta, we have explained the company in detail. Post-listing, we are looking forward to those numbers. And where do you see the company headed in the next few years? For the time being, we appreciate it, both of you gentlemen joining in and filling us in on all of those details. Well, for the time being, we'll continue the show. We'll have to slip into a short break. On the other side, we'll get a technical check. Sony's